I keep telling you, in this market, good news is bad news. And sometimes bad news is also just plain bad news. And that's how you get a day like today, where the Dow plummets 349 points. Believe it, 1 point is much uglier. S&P plunges 1.45%, and the Nasdaq nosedives 2.18% on strong economic data. Because strong data means the Fed will need to keep tightening, and maybe tightening aggressively. On top of that, we got a very, very problematic earnings report from Micron, the big commodity chip maker with far-reaching markets, and that is just plain negative, too. Remember what's supposed to happen here. Let's step back. What do we want? We have America's largely service economy, right? That's what we're not. Manufacturing, we're a service economy. And we're a spending economy. The Fed wants to slow that spending down. But when it sees we had 3.2% GDP growth last quarter, that was revised up from 2.9%. That was this morning. And we get fewer than expected jobless claims again this morning. It shows that Jay Powell's war on inflation has still got much longer way to go than we thought. People aren't spending less. They're spending more. Mortgage rates actually going lower, too. That's not supposed to happen when the Fed wants them higher, or at least to slow down the purchase of housing. And that's why all this seemingly good news for the economy just turned out to be plain bad for the market. But when it comes to individual companies, bad news, well, it's just plain
the house of pain.
Bad news, which it brings me to Micron, the chip maker that reported a very, okay, it was an awful number. It also made it clear that 2023 will be ugly, too, next year already, because things are as bad as they were now. They have to go back to 2008 to see how bad. You never want to hear a comparison to 2008. Now, this is a really important company. Micron's chips are used in cell phones, computers, data centers. All three end markets are as weak as they've been in ages, even the third data centers, because we've got too many PCs, too many phones, and now too many data warehouses for the cloud. The demand just isn't as great as these companies thought, in part because in the case of data centers, which have been a booming market, a lot of the problems are in gaming and in advertising weakness. The customers just don't need more space. This wouldn't be so bad, except that technology is so huge. Now, a lot of people don't understand the way the stock market works. It's a breakdown of how much in the S&P a sector is. And right now, 26% of the S&P 500 is in tech. A decade ago, it was only 19%. Back in 1995, it was less than 10%. These days, tech's huge, with gigantic market companies that really do control this market in a lot of ways. Even after an awful year for the sector, these sectors are still too big. So when a good company like Micron tells us that every key area is weaker than we expected, it reverberates throughout the whole market. Just because the issue isn't Micron. A lot of the problems they have are its competitor Samsung from Korea, selling below market prices, really wrecking any near-term hope for a comeback. But even if this hideous quarter from Micron would be something we could handle if the Fed were winning its war on inflation, at that point, what would happen is the Fed would take the brake off they would stop trying to slow the darn thing down. And maybe they would even tap the accelerator to breathe new life in the economy.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.